Things could get really intense, like gold moving hundreds of dollars a day. And it's not just going to go straight up. There's going to be days where it gets scary down because there's going to be dollar crunches here and there where
Step into the realm of financial foresight and explore the remarkable ascent of gold prices alongside Rafi Farber. Despite the Federal Reserve's inert stance and a dwindling money supply, gold continues its unwavering climb. Discover why Farber staunchly advocates for gold's status as money as we navigate through tumultuous economic waters. Stay engaged as we unveil the intricacies of unraveling monetary systems and heed Farber's cautionary note that the endgame may be closer than anticipated. Prepare for an enlightening journey through the world of finance. Now, let's return to Rafi for further insights.
frankly, I'm surprised. I'm surprised because the Fed hasn't done anything yet, and the money supply is still more or less shrinking. I mean, bank credit has been growing lately, and I'm not even sure why exactly that's happening. My guess is that high interest rate debt is increasing because people are maxing out their credit cards. You can see that on credit cards. So since money and debt are both are opposite sides of the same fiat coin, the more debt that people go into, the more money supply there is because of the fractional reserve bank system, as we all know. So that's why the money supply is growing. It's not the Fed doing it. And really, why should gold be hitting new highs now before they start printing again? So I think that's a pretty good sign that when they do, things could get really intense, like gold moving hundreds of dollars a day. And it's not just going to go straight up. There's going to be days where it gets scary down because there's going to be dollar crunches here and there where, banks need their dollars. So they shut down things or call in loans, and you start to see deflationary forces and then inflationary forces the next day. I mean, it's going to get pretty crazy, and you have to understand conceptually, not every day what's happening, but basically what is going to happen as things start to fly out of control, and you got to be prepared for both directions. So I'm excited. I'm also a little bit antsy and nervous, but I try to acknowledge my emotions without being too affected by them because I know what the end game is, and that's what I'm comfortable with. Yeah, I looked back into the 70s, and thanks for reminding me about that. I thought that was a pretty good comparison. In the 1970s, right, 1971, Nixon closes the gold window, and then all the gold and silver bugs who understood what real money was back then, and a lot more people understood what real money was back then than now because we've been so separated from it for so long that we don't even know what it is anymore. Even I don't. I mean, I know intellectually what it is, and I can put the concepts in my head, but it's hard for me to understand that you take a silver coin, you give it to somebody, and that's money, and you pay them, and it has nothing to do with the name on the coin. It has to do with the weight of the thing, right? I've never experienced that before, but I'm going to get back to it. So the 1970s, 1971, he closes the gold window, and then gold and silver don't do much for a year. They even go down. And the gold bugs are like, oh, what's going on? This is crazy. This doesn't make any sense. And then the Keynesians are like, well, we told you that. The reason that people have demand for gold is because of dollars, not the other way around. And then, we're like, what are you talking about? And if Bitcoin existed back then, it would be like, that would still be a popular thing if it was in the 70s because of the closing the gold window. But I digress. We saw that from, I think, from 1972 to 74, gold and silver went up into what was at that point a parabolic top. I don't remember exactly what the number was, but it was the highest ever seen for either metals at that point. And then for like 5 years, silver did pretty much nothing. It went down. It had a bottom 2 years later, I think in 1977, 76, 77, something like that. It took 2 years to bottom, and then it slowly climbed its way back up until 1979 when it hit the 1975 high. And then 1979, 1980, we all know what happened. Everything just went crazy. So I'm seeing the same pattern now that if we mark 1971 as 2020, when there was like a sort of a monetary reset where it's not the exact same thing, nothing ever is, but if you count that as the beginning, then we made a high into 2021, a double top, let's call that 1975. And then we went down into 2022, just 2 years later from 2020. Let's call that 1977. And then we should be around 1978, 1979 right now if patterns repeat. And markets do spiral. They have repeating patterns. Doesn't mean everything has to be exactly the same. Doesn't mean that we have 1 year left exactly because it has to be 1980. But the point of these historical comparisons is to remind us that markets don't always do what they're logically supposed to do immediately, but in the end, they always do. So we just have to keep that in mind and understand conceptually what reality is, which is gold and silver are money, and everything else is based on that. And we'll get back to ground level pretty soon, I think, because things are spiraling out of control politically, socially, economically. Egypt is now hyperinflating right to the west of me. The Egyptian pound was just allowed to float, and now there's hyperinflation over there, hyperinflation in Lebanon, hyperinflation in Syria. I don't know what's going on in Jordan, but like war over here, nothing is calm. What do I say to them? Don't. It's not about dollar profits, right? It's not about earning dollars with gold. It's about having gold, having money, having gold and silver. It doesn't have to be gold. It can be silver. It depends what you can afford. It depends what you want. But you need some money. And it's not a thing that you want to like take a position in and then try to sell it for a dollar profit and then calculate how much stuff you can get with that with those dollars. It's it's about you get a paycheck, right? And you're paid in fake money. So take some of that paycheck and get some silver. Do it every month. And stop. Don't even look at the price. It doesn't matter. And I will say this, that I've noticed, that I also wrote this on the Endgame Investor, that the all-time highs in gold, they're not being reflected in the physical markets. I don't think from the premiums that I'm seeing, they're falling. And they're not being reflected in the ETFs, meaning the retail investors are not really part of this, it seems, because if they were buying GLD, there would be inflows of gold into GLD, but they're still flowing out. So what this seems to me to be is a banker war between banks and maybe family offices. It's focusing on the futures market, and that's where the big money is. They don't mess with ETFs. They're not retail investors. Some big money does, but most of it is in the futures market because all the leverage is there. And we saw this leading up to March 2020 for about a year. Open interest was just heading higher and higher and higher and higher. We're coming off a low in open interest in gold. Open interest is the amount of contracts that are open. We got up to something like 800,000 on the eve of the lockdowns. And open interest is up something like 60,000 contracts. I think it's like 15% of the total open interest from 3 days ago, over the last 3 days. So there's some kind of bank battle going on here, and the stackers are not really involved. They're on the periphery right now. When they get involved, price will go much higher. They're not involved right now, so I don't see this. I don't see this rally stalling anytime soon. Yeah, the people that I listen to, and I'm not a technical trader, so I listen to technical traders because that's not my talent. I want to know what they think, because that's how they see the market. So when I listen to them, they're like, they say, look, I'm a technical trader, but I understand fundamentals also, and I can't understand why gold isn't just heading straight up from here, because the world is insane. And when the world is insane, people go to gold and silver because it's grounding, and they want to have something in their hands that they can feel and know that they can wake up tomorrow and it'll still be there. So they're kind of losing it, and they don't understand. And frankly, neither do I. But it's okay. I know everything's on a delay. I know what's going to happen later. So yeah, on the one hand, I'm surprised. On the other hand, it's about time. And we're living in that dialectic until bam, something happens, and then you wake up the next morning and gold is like $10, $15, $20,000 an ounce, and your dollars can't buy anything. Could it be tomorrow? I don't think it's going to be tomorrow, but it's going to be one of those days.
As we embark on this illuminating journey through the intricacies of finance, we extend our gratitude to you for joining us. Don't miss out on future insights from Rafi Farber. Subscribe now to stay ahead of the curve and receive notifications when new content is released. Remember, knowledge is your greatest asset as you navigate the dynamic world of finance. Keep learning, keep seeking new perspectives, and continue making informed decisions. Wishing you a bright and prosperous future until next time.